We detected some unusual trades on Citigroup stock, ticker symbol C, on the last trading day, April 2nd, as it pulls slightly back from its recent highs. And what's unusual about these trades is that next week, Citigroup reports earnings April 12 before the market. And so in this video, we will analyze this unusual option activity to find out how wealthy investors are trading Citigroup before earnings. Are they bullish or bearish? So that we can also trade in the same direction to make money while the rich are getting richer on Wall Street. So without further ado, let's get to the data as usual. So on April 2nd, we can see these trades coming in. The most unusual trade is this one here at 10:18:29 second mark. We can see these April 12 and April 19 options at the same strike, 64 strike calls. Okay, because we know that April 12 is earnings, that is why this is very unusual and interesting to us. And not only is it just 2,000 contracts, when we take a look at the chain, we can actually see that there's a lot more. So these April 12s, you can see here, these 64 strike calls had a total volume of 11,000. The open interest was 14,000. So there is a good chance that these 64 strike calls are being closed and they are being rolled to the April 19 options at the same strike price, 64 strike calls. You can see this right over here. 10,000 volume for April 19, much greater than the open interest of 3,600. So we know that these are the new opening trades. Now, why are they doing something like this? Well, they are taking advantage of the higher volatility during earnings. Okay, they get better premium to roll their trades. You can see that for the April 12 options, the implied volatility is 36.55%. So they are getting better premium by selling these at this date because this is closest to earnings. It has higher IV, more volatility. So typically, professional options traders want to sell options when the implied volatility is higher and buy options when it's lower. You can see here 32% for the ones that they bought to open. That is on April 19. So same strike price, but they are readjusting their trades, rolling them to take advantage of the higher implied volatility during earnings. These are things that we analyze to help us make better decisions on how these wealthy investors are trading and what are they doing exactly, is also analyzing the implied volatility. It's a very important factor in options trading that gives us more insights into how these wealthy investors are trading. All right. Now you can see that the number of trades that they did for these April 19s is about 10,000, and they paid we saw about 154, right? So if we were to take the 154, multiply by 10,000 contracts, you can see this is about $1.5 million trade here, okay? Now keep in mind, this is a lower probability of profit trade in comparison to our membership trades. And that is why we simply follow the trade at the same options over here at the 64 strike calls. Our position is the same here, okay? We got them for a little cheaper because you can see they were only worth 126 towards the end of the market, okay? Whereas they paid 154. Okay, so sometimes you can get better pricing by waiting. All right, and so you can see that this is clearly a bullish long trade. Now, as we mentioned, this is a lower probability of profit trade for different variables that we've analyzed. Also because there's earnings coming up. So if you want the higher probability of profit trades, then make sure to go to our website. We'll put a link at the top here, where we use the same type of analyses, making sure that we find the best stocks that the wealthy investors are trading, the most clear signals that have data to support them, so we can trade in the same direction while setting up option strategies that reduce risk and increase profits. We don't follow the trades of the high probability of profit trades. We set up our own option strategies. Okay, because we have found that our strategies outperform the unusual options in the long term. Okay, always have to also diversify your portfolio too. We trade multiple stock picks, and that is what we share on our website. So check that out if you're interested. For this trade, you can also see why it's has a lower probability of profit in comparison to our membership, because you can see it has a break even that's all the way over here at $65, and Citigroup is trading at $62 currently. Okay, so this is on the x-axis is the share price of Citigroup. Okay, the y-axis here is the profit loss. Anything above the zero is profit. If the line, purple and blue line, is below, that's a loss. Okay, so that's how this graph works. So you can see Citigroup needs to rise up, breaking $65 at expiration. That's when the blue line starts to be above that zero on the y-axis. Okay, so for this to go up to $65 a share, you can see that Citigroup would have to go up by about 3.87%, okay, which could be possible because we do have earnings coming up, but it could also go the other direction. So that is the risk with earnings. And let us know in the comments below, what do you think will happen to Citigroup for earnings? Do you think this is a insider trading based on leaked information from an earnings report, perhaps? We have this very strong uptrend on Citigroup lately this year. Will this continue to go up? Comment below and let us know if you like the information shared on this video by smashing the like button. And as usual, if you want access to the higher probability of profit trades that we share on our website that can beat the market, then make sure to check it out. All right. So subscribe if you haven't, hit the bell icon and you'll be notified of unusual option activity, and have a great day. Take care.